Hi everyone, Drini here, and welcome to my channel. So we're going to take a look at Bitcoin and the crypto markets today because it's been a while since we did that. We're going to take a look at where we are, where could we potentially go moving forward, and what are the things to watch out for. So let's dive into the charts just to see what I'm talking about. So what I have here is I have the chart of Bitcoin on a weekly time frame, and as you notice, we have just been hanging out for the past 1 month at around the level between the 200 weekly MA of around 22,600 and the 300 MA right here of 16,853. Well, the first thing that we have to account for here is take a look at the sideways action right here. This particular sideways action right here can be our official confirmation that we are in the wave 4 at the moment of our 5-wave Elliott wave structure to the downside. This is your wave 1 right here, from the all-time high all the way to this impulsive move right here. This is your wave 2 relief rally. The peak of the wave 3 was this particular capitulation candle right here, and right now we are currently in our wave 4 relief rally once again before our wave 5 destination somewhere in the future. Now you may be wondering, how long will we be here in this particular period after a particular capitulation like this? So based on previous time frames, one thing that we can surmise is this particular period right here after this capitulation candle lasted for around 8 bars or 56 days before we eventually did something. In this case, we broke to the upside, although in our case, the likelihood unfortunately is we will break down to the downside, and I will talk about that later. This particular period right here after this impulsive move, the corrective wave lasted once again for around 2 months. So the average sort of period of relief or sideways action for this particular time period over the past couple of times that this thing has happened is around 2 months. So we can expect that we have more time to play around with this particular region. In fact, we have maybe around 1 more month to go before Bitcoin eventually decides where it wants to go. In our case, unfortunately, the likelihood is we will continue to go down given the macro environment outside of crypto is also really, really bad. So you may be wondering, if this is our wave 4, then if we're in the middle of wave 4, where could we potentially go? So we can identify a couple of markers. So one is, of course, if we do a reverse Fibonacci, where this impulsive wave right here, this is the 1 and this is the 0, we are currently hitting our head in the 1618 right here. So the 1618 price level of around 21,000 or 20,800 around here, we have been hitting our head at the 1618. So we broke down over this 1618 extension, have been hitting our head ever since. So the next destination then would be the 2, which is the 15,700 price range right here. But if we do overextend, then don't be surprised if we have another price target of around 12,800 or 12,700. This 12,700 would coincide to a 80% or 81% drawdown, which is fairly similar to the drawdowns of the past. So in the previous cycle, we had drawdowns as much as 84%. Don't be surprised if Bitcoin does end up back here on the 12,000 range right here, or if we were to simulate an 84% drawdown, it will be highly likely it will be here at around the 2.414 or even the 2.618 of around $9,000 to $12,000. So in an ultimate worst case scenario, then don't be surprised if Bitcoin hovers around these levels right here. So when you look to the left, one thing that you would notice is this particular structure is very weak because there are no support structures at the moment. We are in a precarious situation because this particular accumulation range right here is equivalent to this particular accumulation range right here. However, because there's no underlying structure, it is actually quite a weak structure. So if we fall from here after our wave 4 is done, then the next valuable targets would be this particular swing high right here, all the way to around this particular level right here. This range right here and this range right here has a lot of price action, which can act as, of course, as our support and resistance levels moving forward. Once again, this is $12,000 all the way to around 8,700. At these price levels, if we reach here, then of course this will bring the most pain, but also it will bring the most opportunity. So personally, what I've been doing is I've just been chilling. So what I've been doing is I haven't really been investing in the markets. I just take a look at price action to see where we are. But when it comes to the overall strategy, I still have a Bitcoin position. So I think that my Bitcoin position is around 36,000 average price right here. So the way I navigate through the market is for me to enter back in, it has to be worth my while. So this particular average price right here is my hodl position. I will be holding Bitcoin for a very long time anyway. So this 36, even though I am currently down by around 50, 40-ish percent, it doesn't really matter to be honest because this one is a long-term hold. What I've been doing is I've been building up a cash position on the side in order to take advantage of potential opportunities. But I will only come into the market when it is worth my while. This particular price level right here, I have been actively avoiding because we are just in the middle of nowhere. It is much better to have another capitulation period for me to come back in because at this price range, for example, it is not that far off from the hodl position that I have given the average price of my position right here. So this cash position is only going to be utilized if we hit certain targets and hopefully we go down to around the 12,000 range or the 8,000 range. But I can also start DCAing once we reach certain levels. So for example, if we hit the 300 weekly MA, then like once again, that is a position that and sort of entry level position where you can start DCAing right here. And if we continue to go down, then you just keep layering on right here. Looking at Bitcoin on a daily time frame, one thing that is fairly obvious is the confirmation of multiple bear flags. So over the past couple of times, we have been experiencing quite a fair number of bear flags. So for example, this is a bear flag right here. And this particular bear flag had a lower technical target once we broke through the downside of around this particular level. So when we reach this level, if you notice, we hovered here for a while. Or you can actually argue that if this is the wick and we followed that as our bear flag, for example, and we had a wedge like that, then the technical target is actually bigger. In that case, we did meet the much lower technical target of around this particular level right here. One thing that's happening, if you notice, is we are in the midst of another bear flag. So this particular bear flag right here, and if you notice, we are currently at another bear flag structure that if we break to the downside, then we do have a lower technical target of around, so whichever it breaks, so let's say it breaks at around this level. Once again, it leads us to the same path. We appear from a structural perspective destined to go all the way down to $11,000. So the key thing to note is if Bitcoin goes to $10,000, everything gets wrecked. That is exactly why, apart from Bitcoin and Cardano, I do not have any other position when it comes to gaming cryptos except for cornucopias. Also, it may take us a long time to really recover from here. So if Bitcoin falls down to 10K, then it allows us to have a much longer time to accumulate before the next leg up. One thing to note, of course, is also the global markets are very, very weak. Inflation at the moment is the key growth barrier across markets at the moment. If you look at certain markets, the US has an 8.6 inflation rate. Some markets are even worse. Turkey has a 79% inflation rate. Argentina a 60% inflation rate. The UK has a 9.1% inflation rate. The Eurozone is at 8.6. South Korea is at 6. Ethiopia is at 37. Japan has a historic inflation rate of 0.42. It is now 2.5%. So even an economy that has forever stagflated like Japan is still experiencing higher inflation rates. That is something to be concerned about. Israel's inflation rate is around 4.1. South Africa is 6.5. Sri Lanka is at 54.6. So given that we may need to be risk off for a while, that means it allows us to sort of take a break from markets, accumulate a significant cash position so that when the time is right, we can be ready to come in with significant force. Yo, before you go, like this video, subscribe, and share this video to your friends. Thank you very much and have a good day.